Hi everybody, we have received the latest updated value-added tax, the full decree from Government of Bahrain, and we are going to discuss the decree number 48. As of today, this is the latest one, so we will go through one by one the key terminologies, and we'll discuss the articles, and we'll try to understand that how the VAT value-added tax in Bahrain works, and we will discuss that what are the similarities between VAT in Bahrain, VAT in UAE, and VAT in Saudi Arabia in a context of GCC environment. So, as any typical law starts, they first define the terminologies. So we will go through some terminologies. The first one is, what is the meaning of kingdom? Kingdom means Kingdom of Bahrain. When the word minister will come, it will be the Minister of Finance. When the word authority will come, the authority will mean the National Tax Authority of Gulf, created and established by a decree number 45 in 2018. Unified Customs Regulation and Procedures, which are approved in decree number 10 in year 2002. First entry point, it means that the first custom entry where the goods are coming from abroad. Final destination means the final point where the shipment has to be landed. Intercompany supplies, when you have a same owner and you are exchanging good between the group. Intercompany supply means purchase made from a resident in the Kingdom of Bahrain. Customer is resident in another applicable country, or vice versa. There are so many terminologies which are easy to understand. We'll start with Article 2. Article 2 is related to tax scopes. Tax scope will be usually the same that as we know in the VAT law in UAE and Saudi Arabia, and there will be also a reverse charge mechanism on these taxable supplies. Article 3 is about tax rates. So like in UAE and Saudi Arabia, value-added tax will be 5%, which is very less in comparative with other countries like UK, Europe, where the VAT rate is exceeding 17-18%. So there is a very nominal and effective rate that is 5%. I'll discuss Article 4, which is who is obliged to pay the tax. So there are certain scenarios where if you fall into, you become liable to pay your tax. So the first condition is that the taxable customer who receive goods inside the kingdom, any person who is recognized and registered as an importer, each person mention the amount of tax on their invoices inside the kingdom. These all are required to pay value-added tax. Article 5 is about the supply of goods. Importation of the goods shall be deemed to be the transfer of ownership or disposition thereas its owner, including some of the cases like waiver or possession of goods under a contractual obligation, granting in kind property rights that give you a right to use a particular property, transfer of ownership goods in the forceful manner, transfer by any taxable person forming part of his assets, use of goods transferred to other implementation states like UAE and Saudi Arabia for time being. Article 6 deal with the supply of services. So any kind of goods you are importing and exporting, this is a supply of goods. While there is a huge sector that is in service, so supply of service is also very important to understand in terms of import of supply and in export of supply. So supply of service is when you are talking about buying a software, you are giving some consultancy advices within the implementation stage or outside it. So these are all scenarios that will cover the supply of services. Article 7 deals with issuance of the purchase vouchers. So we cannot say that it is a sale or a purchase until consideration received for this sale or purchase issued exceeds its nominal value. The process of supply of these goods and services will be subject to the payment of purchasing these vouchers. Now we will discuss Article 8, that is the acting supply. It means you are receiving a stock on behalf of someone. For example, I am a company and you are a supplier, but I am not directly importing from you. I am involving an importer, so goods will come in the name of importer, but it is actually for me. So there are a lot of scenarios like this, how to handle these. So law says that if a taxable person supplies or receives goods and services in his own name on behalf of another person, he shall be treated in the supply of receipt himself. There's a huge government sectors that receive goods and services. So Article 9 applies on supplies which are issued by the government agencies. So most of the government agencies, they are under the same VAT regulation unless they are not operating in a non-sovereign manner. Now we'll discuss what is the post supply. Article 10 give more clarification about it. The taxable person shall be deemed to have performed a supply transaction in the following cases. Like there are certain cases, it may be a situation like the use or consignment of goods constituting part of its assets. So a taxable person shall be deemed subject to a supply transaction if the use or assignment of goods part of its asset other than the objective of the economic activity. When you are going to change the use of goods to a non-taxable supply, preserving the goods he owns on the date of cancellation of the registration, disposal of goods free of charge unless for the purpose of using them as sample or gifts for the purpose of his economic activity within the amount specified by the regulations. Any kind of provision of service in this context is free of charge. Let's talk about the due date of your tax liability. So Article 12 clarify this. So the time when you are going to issue a tax invoice or where you have received the advance payment in full or in consideration of a total balance, total payment, you have received a partial amount. Particularly the date of supply of services and goods on which the tax is due shall be as follows. The date of supply of goods and services on which tax is due is subject to various conditions. For example, the date of commencement of the carriage of goods if it is carried under the supervision of the supplier. It can be either a date on which you have placed the goods and services at the disposal of the customer in case if they are shipped without the supervision of the supplier. So it depends like what are your shipping terms, free on board on destination or free on board till the port. This is you have to see the scenarios related to the movement of the goods. In terms of supplies, you have to see that when the date of completion of installation has been done, or are you going to assemble something, so when the assembling will finish, that's the due date for your tax. Any other service you are giving, the completion date of these services, you are going to raise a tax invoice and it is the right date on which tax will become due. Article 13 discuss about the taxable due date. There could be multiple scenarios when you are in a contractual obligation and you are delivering on a periodic basis. So you have particular dates of providing your goods and services. So in that particular case involving periodic payments or consecutive invoices is the earlier date of the following dates that I'm going to discuss, provided that the period of 12 months from the date of commencement of supplies of goods and services will not exceed from date of issuing any tax invoice or any similar document, due date of the payment amount specified in a tax invoice, date of receipt of the amount paid. There are a couple of scenarios where you are serving some supplies. So date of supplies in case where the payment is made through the sale devices is the date of collection of the amount paid. from those devices. It can be a date of custom duty or a date on which it was supposed to be due. And in case of date of supplies, the date mentioned on the purchase vouchers will be considered as due date. Now we'll discuss a very important point, that is the supply of goods. Means from where the goods has been supplied or the service has been rendered. This is a very important point because that's the real origination to see that are we subject to tax or not. If goods are inside the kingdom and they are ready for dispatch, and in case of supplies, if the supplies and installation has been done inside the kingdom. For intercommodity goods, the place of supply will be where the transfer of or the delivery of the goods has been ended and customer is subject to tax therein, or the supplier is registered or registered therein. If you work in energy and water sectors, so you should understand the Article 15 that deals with it. So the place of supply of gas, oil and gas, shall be determined through the distribution channel, through the pipelines and transmissions and distribution of electricity. Telecommunication is a very important consideration. It can be a very great source of revenue in terms of VAT. Article 18 covers the supply of telecommunication. If it is used inside the kingdom, it will be subject to a VAT. So far, complete list is not available, but it will be soon released. So Bahrain is a trading economy. There are a lot of import and export going on. So let's discuss the import factors. Article 19 is place of import. So how we determine the place of import? So there could be two cases. The first scenario is if the kingdom enters the first entry in GCC for the goods imported. If the kingdom is the place of release of imported goods, when it is placed one of the suspended positions for the customs duties in accordance with the provision of the Uniform Custom Law as soon as they enter in the territory of GCC states. The value of supply will be calculated on the basis of value of non-tax equivalent and shall include all the expenses imposed by a taxable supplier on the customers, as well the fee due as a result of the supply and all tax dues. For example, if you import 100,000 worth of goods and you pay customs and you pay certain other expenses, so on top of this your VAT will be calculated. How we are going to determine the value of the imported goods? So according to the customs rules and regulations, we will see what is specified in the law. So questions come that what will be the scenario if the supply of goods is between two associated people? Naturally, it should be calculated on the market value. In case of assumed supply value, as per Article 23, it will be on the purchase invoice or the actual cost of the goods. What if your supply has some kind of discounts? So how to deal that scenarios? You can assume that the value of supply will be reduced if there is a discount on prices, discount granted to the customers, value of subsidies granted by the state to the suppliers. So in that particular scenarios, your value of supply will be discounted. Your supply of goods will be discounted and it will see a reduction in the value. How we calculate the value of the purchase vouchers? So we'll take the difference of the purchase voucher with the receipt of the purchasing voucher and the nominal value of the vouchers. Most of the time we send goods here and there, like goods will arrive in Saudi Arabia and then it will come to the kingdom. Sometime it will arrive in kingdom and it will go to Saudi Arabia, and sometime goods comes in UAE and it will be exported to Bahrain. So there are a couple of scenarios that we should be very clear about. Article 26 deals with such scenarios. Value when we are going to re-import the goods which has been temporarily transferred to some other member state. The final value when they will be re-imported will be calculated when it will be reaching and touching the boundaries of the kingdom on the basis of value in increase as per the customs rules and regulations. There are certain provisions where you can opt for a profit scheme based return. For example, like for certain type of transactions, it is authorized that rather they will record a sale and a cost of sales, they can work on a gross profit concept where the filing calculations will be based on a gross margin, gross profit schemes. This is same in UAE and Saudi Arabia, and we observe the same as in Bahrain. Of course, first of all, you have to opt for profit margin scheme based VAT filing. Once the authority is going to approve, then you are going to use this profit margin mechanism instead of normal sale and purchase input and output difference. There could be several scenarios where you have to adjust the supply. You want to modify it. So Article 28 explains you in detail. So what could be those scenarios? First is where you have cancel or reject the supply in whole or a part. Sometimes you receive a shipment but you are not happy about it, it's not according to the standards that you order, so you want to reject the whole shipment. You want to reduce the order. First you give a bigger order, now you want to give a smaller order. So there could be several scenarios like this. And some bad debts has happened, so you're unable to collect, where the supplier is ready to accept the good returns. Let's talk about the most important, that what is the mandatory registration, who will register and what will be the thresholds. So in Kingdom, if in 12 months you reach to the threshold, then you are supposed to register yourself. Now there could be several scenarios where you are a group of company and you register yourself as a group entity because you have some common shareholders. So in that particular case, make sure that all companies and the group will be liable for the tax liability. Generally people ask that how many days they have when the transaction will happen and they can issue invoice. So you should know that within 15 days of the transaction you should issue a tax invoice. If you're in Kingdom, so you have to use the Kingdom official currency for the VAT invoices. In any country, when a VAT comes first time, so you could have some scenarios where you have some transactions before the date of registration and which has not been executed, or if they are services, they are not delivered. If they are assets, they are not been depreciated. So how to handle these transactions also very important, and you can put certain transaction and claim your imports if it meets certain criteria. Article 47 deals with income tax on capital tax. Tax on capital assets is deducted at its book value at the date of registration. It is mandatory that you keep all the necessary records related to the assets in your custody in case it is required to reproduce to the authority. When we talk about VAT, we can have three type of terminologies in our head. One is zero rated, that is generally in the case of exports. So when we send good out of the country, just increase the local manufacturer to grow and adjust the balance of payment and trade. It's very important for a country to increase their exports. So all governments encourage exports and they give them the zero rated provisions, and it can be fully paid and it can be exempted. Exempted are those which are specified categories like education and health, where it assumed to be burden a customer or a normal citizen. So based on a human factor, these are considered as the exempted sectors. So let's discuss the zero rated in terms of export of goods and services. This is discussed in Article 53 in detail. So any export outside the territory of the kingdom, supply of goods, supply of preventive and basic health care services and associated goods with it, supply of import of medicine and medical equipments, any kind of re-export, supply or import of gold, silver, platinum investments, supply and import of pearls and precious metals, construction of a new building, local transport sector, oil and gas derivatives, supply and import of foodstuff will be zero rated. As I mentioned, there are some services which are considered exempted. So provision of financial services will be fully exempted from it, specifically like as a fee or a commissioning or a commercial discount. Supply of land, space and building will be fully exempted. Any kind of import which is related to some specific ministries like army, military and certain kind of specific ministries, they may have exemptions. Any kind of import for the personal purposes will be exempted. Anything you previously import and you want to return it, personal baggage, gifts will also be exempted. Special need person stuff will be exempted at home. You should know that value-added tax return filing on the date which is allocated to you is very important. If you're not going to pay on time, you are subject to a lot of fines, penalties, and it is a very serious offense. So you should be right in alignment with your dates, so you should not delay it. But in case of delay not exceeding 60 days, the fine shall be calculated at a rate not less than 5% and not more than 25% of the value of the tax to be recognized or paid. In case of violation, and it is very severe, an authority can decide to publish it in the newspaper at your expense, which can cause you a lot of embarrassment. Article 63 deals with the cases falls under tax evasion. If you're meeting the taxable threshold and you don't register yourself within 60 days, so you'll be considered as a tax evader. If you fail to submit a declaration or the payment of tax due on your import, providing false and fictitious documents, you don't issue tax invoice, you issue a tax invoice for a non-tax supplies, do not keep the records with you in a systematic way, all such scenarios will be taken as that you are in a deliberate attempt of tax evasion. Article 64 put severe penalties on you. So you should also understand the consequences of your violations. Tax are generally complex matters, and if you don't have that capacity in your company who understand the law and who have a capability to calculate the right value, they have capability of managing the proper records. If they can do that, it's fine. But if they cannot, then you should think about appointing a tax agent who can take your responsibility on his or her shoulder, and they can lead your organization in a better way, so you will be in compliance with your tax liabilities. When it comes to the proper documentation, you should know that every tax invoice should have TRN number mentioned and your registered address, and there is a specific format that you should mention on your tax invoice as a prerequisite from the tax authority. Of course, a very smart and effective online system will be available soon. You should know that authority is properly aligned with federal rules, and they are creating contractual understandings between other states as well. So we'll see a bit of harmony in terms of interstate matters. Any kind of inter-procurement between the member states, they will be considered as exports of goods. So this is the first decree that we received, and I explained you a couple of stuff. Of course, as the regulations will keep coming, so we'll keep explaining different topics. Until then, you stay tuned and stay in touch.